What is going on, investors? My name is Emmanuel, and in this video, we're going to review Tattoo Chef's recent Q4 and full year 2020 earnings. Now, we did live stream it on my channel, so if you happen to miss the earnings call, all you have to do is head back over to my channel and you can see it was streamed 21 hours ago. I would definitely advise you watch it if you are a serious Tattoo Chef investor. And I also want to say thank you to everyone who turned up. The live chat for the live stream was popping. It was great to get your feedback as we were listening to Sam Galetti and Sarah Galetti give their thoughts. And also we had a QA that followed, which I thought the QA session at the end was probably the worst part of the whole earnings call. However, there has been some controversy following the Tattoo Chef's recent earnings because Jeremy from Financial Education, this is his third channel, Financial Education Free, he called out Meet Kevin in this video because apparently Meet Kevin wasn't happy with Q4 and he ended up selling his entire position of Tattoo Chef. Now in the video, Jeremy did hit on some points that he didn't agree with regarding the reason why Meet Kevin sold. But I personally felt the earnings was incredible, and that's what we're going to review today. And this is why you have to do your own due diligence and build up your own conviction on the company and not just rely on a YouTuber or an analyst to tell you what to do. You have to do your own DD and draw your own conclusions, because I personally think Meet Kevin was wrong to sell his entire position, but that's up to him. Jeremy remains very bullish and he said he'll be happy to buy even more shares based on Q4, because I thought Q4 was amazing. So before we dive into all of that, make sure you smash the like button. If this is your first time on my channel, hit the subscribe button and the notification bell to stay up to date with all of my latest video content. And if you are looking for a Discord community where we talk about all things Tattooed Chef, then the Patreon link to my Discord group is in the description below. So with all of that said, let's dive into it. So the first highlight for me was they announced that Tattooed Chef branded product increased by 363% compared to the prior year. Now that growth in Tattooed Chef's branded products alone represented 57% of total revenue for 2020, which when you compare to 2019 only represented 22% of total revenue. So at 57% of total revenue, that means that Tattooed Chef's branded products has finally exceeded the revenue generated from private labeling, which is absolutely incredible considering Tattooed Chef only started in 2017. So within the space of 4 years, they've managed to grow this company's brand to where it's now officially the largest generator of revenue for the business, which is simply remarkable. And for me, it solidifies my confidence in Sam Galetti and also the rest of the management. And they also informed shareholders that they expected this to increase to about 75 to 80% of total revenue within the next 3 years. So think about it. By 2024, we're expected to have 80% of total revenue coming into the business as a result of the sales of our branded products. And I think that's simply incredible. And I do think we can achieve that. And I also think they're lowballing it. I felt the earnings call in general was them really lowballing it, because this is a fantastic achievement. And I don't think they really brought about the significance of this, because this is simply remarkable within the space of 4 years. Amazing. So they also told us that by the end of 2020, that our Tattooed Chef products were in 4,300 chain stores and 23,000 points of distributions. Now, they also informed us that our target for 2021 is to be in 10,000 chain stores and 65,000 distribution points. In my opinion, low balling it. I think we're going to absolutely smash this out of the park. And I understand that the management are trying to set our expectations quite low, but if we were able to achieve 4,300 chain stores in 2020, it becomes a snowball effect. And I really believe that by the end of 2021, I've got my own personal targets that I think we can be in 15,000 chain stores by the end of 2021 and potentially 100,000 distribution points by the end of 2021. So I understand the management are trying to set our expectations quite low, and I'm not entirely sure how I feel about that, to be honest, because I think that's one of the reasons why the share price is red today. I mean, Tattooed Chef has been trading red for most of the day. When the earnings call was going on, it did decline as well. And I think it's just all to do with the management really under-promising. I guess they want to under-promise and over-deliver, but I'm not sure how this is going to affect the share price in the short term. But definitely in the long term, because it's indicating growth, you would expect the value of our shares to be worth a lot more as the company continues to grow their earnings. So I'm a bit 50-50 with it. Next, they also told us that they had newly committed retail distribution partners that were made in Q1 of 2021. And that's already increased our chain stores by an additional 1,765, which resulted with 8,000 new points of distribution. Combine those numbers with what we achieved last year, I mean, we're already more than halfway to our target of 10,000 chain stores. So at least now we have a good idea of how management want to progress going forward. I guess this is something that long-term investors in Tattooed Chef would just have to get used to unless the management changes their ways. And they also hit on the point that we had some great success with Sam's Club within our first year. We established a leadership position with Sam's Club, and it's pretty much because we outperformed all of the competitors within the frozen foods category, which is absolutely great to see. And we also had another feature in their monthly instant savings book. Now, my last Tattooed Chef updates, I did inform you that we were in the, I believe it was the December instant savings book, but we are now currently in the March one. And let me show you what it looks like. So as you can see, there's Sarah. There's our girl right there. That's Sarah Galetti. She's on the front page representing Women's History Month. So that's very good to see. And right here on page 30, we can see the half spread that we got celebrating women. And then you had Sarah Galetti with a lovely smile and also our lovely products. So this is very good to see. And this is simply putting us on the radar of Sam's Club's members. So this is very good to see. So next up, they expanded on our partnership with Target. And that included 6 new SKUs, which will be available in all Target stores nationally, offering a range of breakfast, lunch, and dinner options for Target customers. And this news actually came out before earnings, and the share price, I believe, acted quite positively because we finished the day in the green. But I would have just loved if they had just held it until earnings call. I mean, it came out right before market open, and I don't understand the logic behind it. It would have made more sense to announce this during the earnings call, which would surprise shareholders because I think this is one of the biggest accomplishments. Target is a big deal. However, they opted to announce this before market open, and yeah, it is what it is. So next, they said by the end of Q1, Tattooed Chef products will be on the shelves of key retailers, including Stop and Shop, Southeastern grocers. I think they mentioned Whole Foods as well, many more. Definitely check out the live stream of the earnings call if you haven't already. And this was actually quite new, and I only picked this up when I rewatched the earnings live stream. But essentially, they spoke about partnerships with different food service brokers who will distribute Tattooed Chef's products into the office space, you know, businesses and workforces, and also within the education system. So they want to start reaching out to schools. And I thought this is quite genius. I didn't see that coming, and I can't recollect them hinting at this during analyst day. So this was quite a bit of a big surprise. And I think if we can nail this, of course, this will be great for our top line and our bottom line. So the next part was to do with SKUs, and they plan to bring out 13 new SKUs. Oh, I made a mistake there. I wrote news SKUs. I wrote 13 news SKUs, forgive me. But they plan to roll out 13 new SKUs planned for the first half of 2021. And of course, by the second half, we would roll out our next batch of SKUs. So this is very good to see that we are on target for that. And then they went into detail regarding our sales and marketing with Nitro C. And they said phase 1 is pretty much complete. And phase 1 was pretty much just a test campaign. They ran test video ads and test picture ads. And Sarah did mention that they're pretty much done with phase 1. And by March, we're going to start phase 2, which includes a 15-second video campaign, which will be rolled out across multiple media outlets. So this is very good to see. I am excited to start seeing Tattooed Chef video footages on Instagram. It will be great to see. I'll definitely be sharing it, and on Facebook and all of these social media platforms. It will be really good to see, and it will make me very proud to be a shareholder. Now, they did go through the Q&A, and I thought the Q&A was the worst part of the earnings call. You had Roth Capital Partners, who pretty much was, I think, overwhelmed by the growth and the amount of partnerships and distributors that we have on board. And you definitely need to check out the earnings call to understand what I'm saying. There was another guy called Rob. Again, he just waffled on, and it was quite disappointing, to be honest. It was really disappointing, and I don't want to waste any more time on it. And then lastly, they gave us the financial highlights, and I believe it was Chuck who gave us the financial highlights, and which we did really well. So you can find the financial highlights on their website, which I thought was very good. In terms of the full year, we pulled in 148 million on our top line, which I thought the financials were okay. They weren't great, they were okay. One of the main concerning things that I saw during the live chat was our operating operating expenses. Now, if you take a look at December 2019, for the same period, our operating expenses was 1.8. However, fast forward to December 2020, our operating expenses jumps to 7.8, which is absolutely insane. So operating expenses includes your sales and marketing, your R&D, so your research and development. So I would love to see a full detailed breakdown of why we had such a massive jump. And as a result of our huge operating expenses, that resulted in a loss from operations. However, as you can see, our net income was 41 million, and that's as a direct result of our income tax benefit expense. So a lot of the negative comments that I've been seeing online is people saying that if it wasn't for the income tax benefit from us turning from a C Corp to an S Corp during the merger, we would actually be losing money, which I do get their point. But one key thing that I learned from reading 100 Baggers by Christopher Meyer, which is a great book, by the way, but he emphasized why Amazon is where it is today. And it's because Amazon spent so much money on research and development and are now reaping those rewards right now. So if a company is spending in research and development, I have no problems with it. Especially if you're a growth company, I have no problems with the company spending in research and development, as long as we can see a return on invested capital later on down the years. So investors saying that we're a loss-making company, I don't buy it. A lot of the money, Amazon was for the longest a loss-making company, but they're seeing the fruits now. And I think Tattooed Chef are trying to follow that pattern, and I have no problems with that personally. So that was a review of Q4 and our full year 2020. Those are my viewpoints. Let me know what you thought of Q4 in the comment section below. But with all that said, remember, none of this is financial advice. So please do your own due diligence and your own analysis before you decide to invest in any stock or any company. Remember, I'm not a financial advisor, but if you do want to learn about investing, there are some useful links in the description below. So make sure you smash the like button, hit the subscribe button and the notification bell, and I'll see you in the next one. Peace.